congratulations to Andrea, and thank you for all the extraordinary actions which have been put in place by the regulator, both on the monetary as well as on the supervisory side, and all the states which have been taken, very good and very efficient fiscal actions as well. So banks are part of the solution, are not part of the root cause of this crisis, and they have been proven to be very resilient, extremely active in supporting the economy, extended loans, state guarantee loans, extending moratoria on their own, and working as well with the ex-lege moratoria. So the environment, as I mentioned, is challenging, and it's probably important that we use this COVID environment to have some step further in terms of the efficiency of the regulatory side. So clearly, we have in Europe still too much fragmentation, and I think it will be actually very good to have more SSM. So meaning, more pan-European regulation rather than local regulation, so that the SSM can oversee and decide for pan-European group all the rules which should apply, without having a fragmentation where we have the local regulators, adding additional buffer, which lead to liquidity as well as capital fragmentation. So, in short, to have a pan-European regulator dealing with what I would call a concept of a European banking group, where the interaction is done at the holding level of a group with the SSM, without having too much inefficiency created by local regulators, like making sure the P2R, P2G can be applied on a consolidated level, that the macroprudential buffers could be moved from the national regulators to the ECB. All the national governors sit in the ECB Governing Council, and so as well to have the SSM extending its mandate to more banks, basically in Europe. A second point which is important, and while it was important to have a prudent approach when the pandemic struck, specifically in terms of capital conservation, going forward, it will be key for our shareholders to have more visibility in terms of capital distribution in 2021. While shareholders don't need to have a detailed formula about how the ECB should act, I think that giving a principle, maybe more principle-based, should help give more clarity on capital distribution, both dividend payments and or share buyback, so that we can attract more interest into pan-European bank. Not to say dividends are the only parameter which can make European banks more attractive, but I think this visibility on capital distribution will be important. I understand the ECB is working on the topic, and that I think will be key. Andrea mentioned that we should be careful about not asking for more tweak in the future regulation. Clearly, until the economic situation stabilizes, we can look at maybe having either more phasing or postponing some actions which might create more uncertainty short term. I understand, Andrea, that you're not keen to look at postponing of calendar provisioning. I agree with you that it's important to take the pain first, to take provision, and to sell NPLs for banks. Nevertheless, when we look at the impact on banks on some of the measures, Basel IV, completion of Basel III, calendar provisioning, maybe some flexibility if the situation has not completely stabilized could be welcome, but I'm sure the ECB will look at that. Think as well that the supervisor could incentivize local or European solutions for the handling of state guarantee loans. There will be probably, a certain number of defaults happening in the portfolio of state guarantee loans, and finding the right way to deal with them and sterilize the impact for banks, which is deriving from the contribution of the state guarantee loans to bad bank, could be useful as well. We are working on that, and we can see if progress can be done. So in conclusion, I think that the sector, thanks to its own self-actions, as well as the very strong interaction with the regulator, is actually in a strong position despite a shock which has been unprecedented since World War II. Is doing a lot of effort to support the economy, banks are lending and supporting the economy and putting preemptive action as well to, against cliff effect or worsening of the situation. The good thing between different crises, they have in common is that they do end, and we're looking forward to the end of this crisis and make sure that we can progress further in terms of normalization. So further progress in terms of banking union, in terms of more pan-European actions at the level of Europe rather than at the domestic level, and making and finding still some flexibility if the COVID environment does not improve as quickly as possible, could be extremely important going forward. Thank you.